Hello everyone and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, we've got a few shout-outs this week, Phil, and we've got quite a few headlines to get through. I think we've got a busy show ahead of us.
Busy one, yeah. No interviews this week to stitch
No.
in or anything. No men able.
No, it's just you and me.
You and me this time. Yeah, definitely. So to start off with, just a couple of few things that's happening, and we've noticed in the social space and events coming up. I mean, Pete Waddell, who you'll know that we have interviewed on the podcast recently, and alluded to his expansion plans, and that podcast is still available on your podcast feed. But he's been busy on social this week, hasn't he, Curtis, following his acquisition of the two available car sites in Leeds and in Cannock.
Yeah, definitely, because the turnaround is pretty impressive, because these sites were only bought, I don't know, a month and a half, 2 months ago. It was fairly recently, but they've been rebranded and opened as Big Motoring World sites. And as you say, Pete has been on social media, talking about it, lots of photographs, and this is all part of the grand plan, isn't it? The expansion plan, because I think, as we've said on the podcast before, the business was very much sort of southeast focused when it launched, but that national spread is really well underway now.
Yeah, and he's jumping on anything commentary about the purchase and the transition, and talking about jobs availability and things like this. But just check it out. He's busy on the old LinkedIn and social feeds. But this does actually segue into a story that we'll talk about later from Inchcape. So we'll get to that later on. But there's a busy few weeks ahead now. I mean, I've got the VRA annual seminar next Tuesday, which is down at Warwick University at the Slate. That's on Tuesday the 21st. We are at 200 attendees now, so it might be we will get some possible fallout, we accept that, but we are at near enough full capacity, so we've had to up our buffet budget, Curtis, just to make sure everyone gets enough food on the day, yes.
So there'll be some extra bacon sandwiches first thing in the morning, will there?
I don't know about the first thing in the morning. We have, there is the breaks and everything else, but we have had to make sure that we've got enough capacity for the food.
Yes,
for that many attendees.
It is a big consideration, Phil. You don't want hungry delegates.
Yeah, it ruined the day, that one. There's nothing worse, is there? So that looks like it's going to be another benchmark event for the VRA. So really looking forward to that one. But we'll talk about that more once we've had it and what the outcome was like.
And good luck to everyone who is shortlisted for a Motor Trader Award, because the awards happen next Wednesday as we record this. That's Wednesday the 22nd at Grosvenor House. It's going to be a big event. It always is a big event, but this year, obviously, there's all the dealer categories, but there's also supplier categories, and certainly talking to various people at the recent AM Live, there is a lot of excitement and anticipation as we go into the Motor Trader Awards. So good luck to everyone.
Yeah, and that's so at the same time, there's also the Fleet Europe event taking place over in Lisbon for 2 days. That's the 22nd and 23rd. But those that haven't got the pleasure of flying over to Portugal to attend the Fleet Europe event, you'll be probably at the Grosvenor House at the Motor Trader Awards. But following that, there is the Car Dealer Used Car Awards, and that's on the 27th of November. So again, good luck to anybody who has been nominated for the Used Car Awards by Car Dealer on the 27th of November.
And not forgetting the Ben Ball, which is actually the week after. So, so we've got some busy diaries out there at the moment. The Ben Ball is on the 6th of December, and that's at London's Old Billingsgate Market. And I noticed they were on social media just a few days ago, still promoting the event. So I'm assuming there are still tickets, but they're probably going pretty fast now.
Motor Trade Radio podcast, powered by eBay Motors Group.
Headlines this week are from Motor Trade News, AM Car Dealer, Motor Trader, and the FT. We'll be asking whether car makers are gearing up for a return to a push market. Are we seeing a return to tactical registrations? Car makers step up EV discounts in a bid to stem global demand slowdown. Long-term hit to EV values expected by many dealers. And staying with the EV theme, why we may have 1 million EVs on UK roads by February next year. And Inchcape are set to shut 8 of its recently opened used car supermarkets. That's nearly half its multi-brand network. So we'll be taking a look at that as well.
So as you say there, Curtis, I mean, there's a story came out from myself through Cox Automotive around the registrations and the new car registration results for October and obviously therefore the year to date. Pretty accurate. I'll stand on my. Whilst it remains accurate, I'm all right. I'll stick with it. But yeah, we're about 97.2% accurate on our new car registration forecast. But essentially, you know, on a serious note, that's kind of reaffirming where we expect the market to start to head. And you've thrown the old tactical registration pre-reg words out there, Curtis.
Yeah, I couldn't stop myself. It's the old journalist still inside of me.
Yeah, I mean, we knew it was, you know, there has been, you know, there's always been pre-reg tactical registrations of one form or another, and they've certainly, you know, in recent years that hasn't been the case because of the shortage of supply and the lack of necessity to push volume into the market. But you know, as everybody across the sector that is involved with new cars at all will be seeing, there's a lot of push now from the OEMs. And we've been talking about it, haven't we, over the recent weeks and months because of the ZEV mandate and supply now recovering and things like this, that we're certainly back into a very, very strong push new car market with significantly heavy incentives and subvented finance helping to try and encourage consumer activity in that space. But obviously, you know, then it's the conversations with the fleet operators and the dealer groups for tactical registrations by some of the OEMs.
Yeah, because you're right. We have seen it in the SMMT figures. If you sort of analyse that fleet and retail split, because I think in the year to date, fleet is up by something like 40%, whereas retail is up by just 1.5%. And a lot of that tactical activity, I'm guessing in the year to date would have gone into fleet, but what we might see now is what happens with retail as some of those registrations go into the retail market.
Yeah, I mean, you know, that's always the issue. You know, you got your fleet and business as the sort of registration channels, which tends to be where the tactical, whether that's B2B tactical registrations or pre-reg through the dealer network, tend to happen. But you know, it isn't just that. I mean, you know, we've got another story coming up next with the Financial Times looking at those EVs. But there's a lot of consumer incentives at the minute, and there's a split market starting to appear between new and used, because you can walk into a new car showroom and get some deposit contributions, cashbacks, discounts, and subvented finance up to 4 years, 0% on new cars. Whereas in the used car market, you've got APRs looking at 10, 11, 12% on what still are fairly heavily priced used vehicles compared to pre-pandemic levels. So there's a bit of a split market at the minute that we're trying to keep a close eye on.
And staying with the theme of discounts, heading over to the Financial Times, the headline there is car makers step up EV discounts in bid to stem global demand slowdown. I do urge you to head over to the FT to have a look at this story, because it's actually very, very detailed. It's a good piece by Peter Campbell, although he's looking at the sort of international market, he's very much sort of focused on the UK. So there's some interesting stats here on the UK that I hadn't seen before. But what the gist of the piece is that car makers in leading Western markets have significantly increased the range and scale of discounts they're offering on EVs. And this is very much in a bid to counter weaker than expected appetite for battery electric vehicles, certainly among mainstream buyers. And this is very much looking at the sort of retail demand. We know EVs are going into the fleet sector, but we were only saying last week, I think, when we were looking at the October registrations, how that rate of growth has actually slowed down. So what we're seeing now is introduction of more OEM discounts, and within the piece, it actually has a figure again which I hadn't seen this before. But the average discount on an EV in October was 11%. So that's 11% below the recommended retail price. So some interesting developments here, Phil.
Yeah, no, and I mean, it's a great story, as you say, from Peter Campbell there, and I wouldn't expect anything less. In his interest in the automotive sector is phenomenal. But the discounts are certainly there, and as we were just citing before, some of them deposit contribution and discounts, and not just on EVs, right across the market. But just to call out a few, the iX, the i7 xDrive, which is the BMW with a list price of £117,000. Yeah, you heard that correctly, Curtis.
Ouch.
There's a deposit contribution through the dealer network of £4,500 plus your normal negotiation. Your iX xDrive has got 5,000. There's the Mercedes EQC 400 4MATIC AMG line Premium Plus, which is a list of just over £73,000. The market on that is £8,600 off the list price, plus 4 years 0% finance available on that, and that runs until early January next year. So you can start to see now that there is deals at play. Even things like the hybrid Fiat 500X has got deposit contributions and cashbacks and dealer contributions. So the market is shifting, and it's shifting very quickly. And particularly, as you say, that EV market is a significant part of that, which is starting to play out in these figures here. But again, some great comments in here, and even if you go to sort of a little bit further down in the story, there's they've spoken to Darren Arden, who obviously is the MD and runs the Perry's dealership in the UK. And he's saying that anyone who was almost about to buy an EV has thought they have now 5 more years. So he's referring to what we've talked about, this 2030 to 2035 deadline movement has given the perception to consumers in some cases that they've got another 5 years to make the decision about this transition to EV. So I think in some ways it may have backfired what they've done in terms of this acceleration and shift to EVs.
Yeah, definitely. And there's an interesting quote within the piece from Fiona Howarth from Octopus EV, the rental and leasing business, because she's talking about while many business buyers receive those generous tax incentives, retail buyers are finding the increased prices harder to swallow, especially in markets such as the UK that have wound down some of the purchase incentives behind EVs. So she says retail demand has been more challenging. Interest rates and residual values had made monthly payments higher, so finance deals are now much more expensive across the board. So those those discounts that we're talking about, they really need to start to be factored into some of the EVs, some of the PCP rates, for it really to make a noticeable difference and encourage buyers to make that switch. Because as you say, for a lot of buyers, the mindset is now that, oh, I don't need to do it for my next purchase. because I've got another 5 years.
Yeah, so I say it's a great story and there's some great numbers in there and charts that Peter Campbell's put within the story. So it'll be in our news feed as normal on Monday morning. So we'll put the link in there. But I would urge you to have a good look at that because it gives you that holistic view of the global EV market, but also that UK market as well.
And staying with EVs, heading over to AM Online, the headline there is long-term hit to EV values expected by many dealers. So this is having looked at the sort of retail and fleet side of the EV market. This is very much what dealers are thinking at the moment. And this piece looks at so that the government's decision to bump the ICE ban back to 2035. They're looking at what this means to dealers, and it's based on the latest research from Startline Motor Finance, which found that nearly half of dealers think the values and prices of EVs will fall as consumers take more time to make the switch. So, yeah, hot on the heels of the last story, consumers will hold off. Prices need to come down, so car manufacturers need to do something about the pricing. That's pretty much what dealers think at the moment.
Yeah, I mean, it's. I think this is the thing, isn't it? I mean, your choice of non-EV is diminishing as well. I mean, this is the thing now that consumers are just not going to be. Their choice is just disappearing. They'll be going into new car showrooms in 2024 and beyond, and if the incentives aren't there, then they're just going to be priced out of the market, aren't they?
Yeah, definitely. And yeah, within this story, there's an interesting point made that 44% of those dealers believe a corresponding rise in petrol and diesel prices and values will actually occur as customers stick with their petrol and diesel models for longer. So yeah, really looking at some changing dynamics here, which will make petrol and diesels more expensive potentially.
You just couldn't make it up, could you?
You couldn't. Talk about unintended consequences.
Exactly.
So we'll be back after the break with the rest of this week's headlines.
You're listening to all the chatter that matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So back over to Car Dealer now, and the headline is UK's roads will have 1 million battery electric vehicles by February. And this is saying that the number of battery electric vehicles on UK roads predicted to top 1 million in the next 3 months. And this is from CAP HPI saying that despite the sector's growth, private drivers still need incentives, which reverts back to what we were just talking about in the previous story from both the FT and Startline Finance there in AM, and that a massive 200% increase of 2000 to 2019 to 2020 yet to be repeated, saying that CAP HPI there. So, we're sort of talking here about the size of the used vehicle market and battery electric vehicles now coming into the marketplace. And I don't like to say it, but we saw what happened in October of last year when the Teslas started to come back in significant volume into a used vehicle market that kind of wasn't ready for it, was it?
Yeah, definitely. And we're really talking about some big figures now, because for so long BEVs were a tiny percentage of certainly initially the new car market and still to a certain degree the used car market. But the estimation is that there's now currently 900,000 pure BEVs on UK roads, which is a figure that I must admit did surprise me.
Yeah, it's a big number. It's a big number. But it's growing. I mean, that's, these vehicles are going out. They're going out on mainly in the fleet sector. So the life cycle is slightly shorter than many consumer owned vehicles would be, because they're out in the market and coming back fairly quickly in some cases. So, we are starting to see the impact of this push of battery electric vehicles, particularly through the pandemic period when that was always available for registering.
Yeah, definitely. So we'll catch up, no doubt, with Darren Martin in February next year to find out if we've actually hit that million EV landmark, really. Heading over to Motor Trader for the next story, and the headline there is Consumer Used Car Finance Market Falls 9% in September. So this is based on the latest figures from the Finance and Leasing Association, and the story says that consumer used car finance reported a fall in new business in September of 9% by value and 7% by volume compared with the same month in 2022. So looking in at the year to date to the end of September, new business volumes in the market were 6% lower than in the same period in 2022.
Yeah, and there's a nice little quote in here from Geraldine Kilkelly, who is the director of research and chief economist at the FLA, saying that the issue with new registration plate in September gave a boost to the new car finance market, with both the business and consumer sector reporting new business growth by value and by volume. But the end of the story, they talk about that respondents to the FLA's Q3 2023 Industry Outlook Survey remained optimistic about the growth opportunities from supporting businesses and consumers' transition to net zero. So they've kind of talked a little bit about that transition to an electric vehicle marketplace, haven't they?
Yeah, there's no escaping EVs this week, is there?
No, no, they're everywhere.
No matter which story we turn to, EVs are there, which I guess reflects the wider market, really, doesn't it? There's no escaping them. But certainly some interesting trends there, certainly on the used car finance from the FLA.
Yeah, and we are starting to there's rumours across the market, which is what you start to get as valuations start to fall. The nervousness around lending and funding
Yeah.
within the car sector that starts to play in, because when you're lending against these vehicles, they just want to make sure that risk is covered around the used vehicle value depreciation. So I think we'll probably start to hear a little bit more as values continue to fall around that lending marketplace. But hopefully the recent inflation easing, should we say? I won't say fall, because it's will help this market, but we'll keep an eye on that closely.
And final story this week is also from Motor Trader, and it's Inchcape to shut 8 Bravo Auto used car supermarkets. So I think this is a bit of an exclusive from Motor Trader, because they've got some comments within the story from Inchcape, and it is directed very much to Motor Trader's questions, I think. But the story is really about so Inchcape is to shut 8 of its 17 Bravo Auto used car supermarkets at the end of the month. So, this is pretty imminent. And the story says, these sites are failing to make sufficient returns. Goes on to say, Motor Trader understands that 100 staff have been issued with redundancy notices as the company takes steps to, as it says in its own words, optimize the network. So this really is a curious one, because Bravo Auto, we covered the launch of this actually only as recently as November 2021. So we were talking about 2 years ago, and it was very much a set piece for Inchcape. I think what they did was they piloted this multi-brand used car supermarket idea in the UK, with the idea of rolling it out into the European markets it operates in. But it does look as though the brakes have been applied now, and it's an interesting one, this, isn't it? Because only as recently, I think it's January this year, they actually added 4 sites to the network because they grew in Swindon, Warrington, Towcester, and Norwich. So this is coming hot on the heels of that expansion drive.
It is, and there's always a question around Inchcape in terms of their representation and presence in the UK, as we well know. But I think this is more focused towards that used car supermarket kind of marketplace. Now, we've talked around Motorpoint, we've talked around Big Motoring World's acquisition of the Available Car. We've recently spoke, obviously, with the Peter Vardy's decision to close or repurpose some of their supermarket sites, which is all to do with volume of used cars. But yeah, you just don't know what the rationale is with this, because when they, as you say, it wasn't that long ago, was it, that they announced this big expansion, this big strategic plan to get into that used vehicle market, specialized sort of supermarket territory. And not so long now, as you say, fairly quickly after closing a significant number of those sites. So yeah, it may be that they are just focusing on their core areas and core area of profit opportunity if these sites are just not giving that return on investment that they need to give.
Yeah, I mean, I really was curious when I saw this story, so I actually went back into some of the previous stories about Inchcape, and I did find also in Motor Trader the sort of launch story. And at the time, Inchcape were describing the Bravo Auto business as a new global model for standalone omni-channel used car retail. And interestingly, it did single out after sales as being a key part of the proposition, which of course Inchcape were in a very good position to offer after sales, because these sites were either close or on the same site as franchise dealerships. And at the time they were saying there is further value to be created and captured from the total car park aftermarket by leveraging our distribution and tech expertise in the parts segment. So they didn't just see this as purely a way to sell used cars. It was the after sales servicing as well as parts sales. And it's going to be interesting to see what they do next now, because this effectively puts the brakes on the expansion and halves the size of the network.
Yeah, and like I say, we talked about Big Motoring World right at the start of today's podcast, and as I said in there earlier, we know, and it's actually cited in the Motor Trader story there at the end, they're talking about the Peter Vardy moved fast to lose 2 supermarkets, citing stock shortages. Motorpoint also paused an expansion program this year due to stock sourcing challenges, whereas Pete Waddell and the big motoring world is expanding and looks to continue expanding. So yeah, it is all about that stock and scale, isn't it, that they're looking at.
Yeah, and I wonder, I mean, it might be a conversation for another day, and we could involve Steve Young from ICDP in this, but I wonder if it reflects the I don't know, the core expertise of franchise dealers going into the multi-mark used car supermarket sector, because as you've already mentioned, Peter Vardy tried it. They ended up closing 2 sites. Inchcape now closing 8 sites. Whereas you compare it with maybe the likes of Sytner, who bought an existing business, the car people, back in, I guess that must have been 2018.
Yeah, it would be. Yeah.
And yeah, that's been a very successful operation. But I mean, certainly from my understanding, it's very much run as an independent business within a franchise business, but it wasn't one that they set up, they bought it. I wonder if that is the key differentiator for how franchise dealers approach that multi-mark used car supermarket model.
Yeah, like you say, maybe it's one to probe Steve Young with when we get Steve on the next catch up with him, and just get his understanding of this, entering that used supermarket sector, whether from a franchise group perspective or an independent supermarket specialist. We'll gauge that view with him.
But that's all for now. Many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
If you'd like to get in touch with Philip and Curtis, maybe with a press release, or even join them on a show, please send an email to motortraderadio@yahoo.com. You can also join the Motor Trade Radio LinkedIn and Facebook groups, or follow the podcast on Twitter.